Millions of Aussies invest in the share market, but it's not the only way to put your money to work. Yes, the share market offers potential for high returns, but that also comes with an extra bit of volatility. That's where global private credit comes in, one of the fastest growing asset classes in the world over the past 15 years. Global private credit is a form of non-bank business lending on a global scale, and it is much more diversified than Australian private credit. Investors can access steady and attractive income with lower risk and better returns than traditional fixed income asset classes, whilst avoiding share market volatility. There are limited global private credit providers in Australia. One option is Term Plus, a fixed-term investment paying monthly income that's linked to the RBA cash rate plus a fixed margin. Term Plus target returns are tied to the RBA cash rate plus a fixed spread. Returns can be paid to your bank account or reinvested for compounding. Head to termplus.com.au for more information and to read the PDS. Remember to always consult a financial advisor to find the best fit for your financial circumstances and goals. Drew Meredith, how are you going?
Very, very well. It's been an exciting, eventful week, hasn't it?
Wow, bring the energy, Drew.
Yes, always.
Drew is, for example, going camping. How do you feel about this, Drew?
I'm not sure. I have to go to Kmart and buy all my camping gear, which I think is going to be more expensive than staying in a hotel.
Definitely getting your camping gear from Kmart makes the most sense for any seasoned camper. That's where they go.
For sure. BCF, get a bit overwhelmed with that sort of thing. So,
don't get me started on BCF.
Yeah.
Who owns BCF, like on the stock exchange?
Didn't Bapcor or Super Retail just got the CEO of BCF?
So Super Retail Group owns BCF. Let me just bring this up in the ticket terminal, TAKR. This has got a story to it. Don't you worry about that. As a keen fisherman, I can tell you what. BCF
We're not doing proper camping. We're only camping a couple of nights.
BCF is a rip, bro. So Super Retail Group, which owns, a bunch of stuff. Superchip, Auto, Rebel, BCF, MacPack. Oh, MacPack?
Solid.
MacPack's pretty good. So it's got a gross profit margin of 45%, which
pretty good for a retailer.
It's not bad, yeah. EBIT margin of 9%.
Bit of a struggle.
Return on equity of 16.5%. It's got historically this business has paid a pretty good divvy, hasn't it? Yeah, 3.9% dividend yield. Pays out 8% of its profit.
It's going better than Bapcor, isn't it?
Yeah, Bapcor's had a pretty hard time, but it's pretty...
Oh, yeah.
Yeah, share price has fallen from $8 to $3 in the last couple of years.
So get out to BCF.
Yeah, boating, fishing, camping. You do pay extra, but it's good fun. So that's all that matters. You're going camping up just inside New South Wales, over the border from Victoria. You're going to Merimbula.
Yes.
So shout out to everyone in Merimbula.
Get some oysters.
Going oyster farming, oyster fishing, or whatever you call it.
Exciting. One of the issues we have in Victoria is that all the good oysters come from different... I mean, it's probably not the best way to start an episode, but we love oysters.
Up yours, Victoria.
We pay $8.50 at restaurants in Melbourne, but they all come from Sydney Rock or from like Coffin Bay. Coffin Bay is 17 hours drive or something like that. Beautiful place. Would love to visit. Merimbula, 6.5. Easy choice.
Easy choice. Merimbula is a beautiful part of the world on the New South Wales south coast, for folks that don't know it. Very, very big fishing town. You can go off the continental shelf, Drew. I imagine you just not getting seasick. 30 k's off the coast. And
I grew up on a boat. Come on.
Did you really?
A ski boat. Yep. Yep. Wakeboarding and water skiing. Yep, I did.
Oh, yeah, you can definitely get seasick on the Murray. That's for sure.
For sure.
But today we've got news. Gold is up. Now it's down. We've got something about private credit, Apple, Amazon, Tesla results, JP Morgan. But then we've got a bunch of questions about small cap ETFs. How do they actually construct these diversified ETFs? Are they any good? Just a lot of stuff going on.
We missed the big news this morning, though.
This morning?
Tesla.
What was the big... Oh, did they drop the results?
How'd they go? Yes. The market, the share price is only down 1%. So, but the gap has closed in our portfolios, which I've noticed concerned about. But also the Rask, not the community portfolio is very seriously lagging this week. I'm not sure what's happened there. Record third quarter revenue for Tesla. Highest quarterly sales of electric vehicles, but this is because the tax credits were about to disappear. So it was a bit of a open-ended. And I think Musk's very focused on, which we talked about last week, the robo-taxis and the robotics and all the investment he's been making there. I think they said it took something like 6 seconds for him to mention AI or robotics.
6 seconds?
Yeah.
Okay. That's got a record?
Yeah, I don't know. I mean, this is what you need for headlines. You need something interesting that doesn't mean anything. But ultimately, the company cruising along reasonably well and could be looking towards a step change. Travis Axelrod. Did he get asked to change his name?
So we've just clicked on for folks that aren't watching, we've just clicked on the earnings transcript from the Tesla quarterly call today, and the first thing that's at the top is Travis Axelrod, which if you don't know,
Bobby Axelrod, hedge fund manager.
Yeah, it's all dodgy. And then Elon Musk. Before we jump into Q&A, Elon Musk has some opening remarks. Elon, and he goes, "Thank you. We're at a critical inflection point for Tesla, and our strategy going forward is we bring AI into the real world. I think it's important to emphasize that Tesla really is the leader in real-world AI. No one can do what we can do with real-world AI. I have pretty good insight into AI in general. I think that Tesla has the highest intelligence density of any AI out there in the car, and that is only going to get better."
AI.
So it's like AI like 6 times in the first 4 sentences.
The share price didn't move. I mean, it was in aftermarket, and I'm pretty sure it was down 1% during the session, but the whole market was off. In particular, gold was off. Aftermarket is down 3.8%. But that can quickly turn.
So the community portfolio, as you mentioned before, has taken a bit of a shellacking. It's up 13%, but it was.
Is that Vulcan
charging?
Again? No.
Vulcan is up 22%. That's got to be the turnaround story there.
KKR's having a shocker.
So for those that don't know, you're tuning in for the first time.
Kev Tui had retired.
Here on the Australian Investors Podcast, every Saturday morning since January 1st this year, we've been tracking 3 fake money portfolios brought to you by Navexa, which is a tax reporting tool. Drew picked one portfolio called the Everything. I picked one called This Is the Best One, named by Monique, our podcast manager, and the Dizzy Rascals community portfolio. In the Dizzy Rascals community portfolio, best performer is Mader Group, which is mining and engineering services. It's really good business. Worst performer is KKR, the private equity business, down 20%.
That was up 40% at one stage. I'm pretty sure Kev just started doing junkets and retired after it was up 30%.
So Kev Tui is actually a phenomenal investment consultant at Atchison Consultants. And he was the one that kind of gave us a tip. But Kev actually, I know this, Kev actually invests in KKR, and it's one of his biggest positions.
Holdings,
So
not anymore.
Poor Kev. This is the best one, brought to you by yours truly. Best performer is RPM Global, which if the takeover deal closes out this year, it could end up about 70% higher. We'll see about that. Home Depot down 2.77%. It's the worst. On the Everything portfolio, all in green, says Drew. It's all
today.
Looking pretty good. He's also got you put the Munro Global Growth Small Cap Fund, which we're going to talk about today, which has Qiao Ma, who has appeared on the podcast before. So she's the portfolio manager of that. But it's looking pretty good. Yeah, it's good for you.
And what's the index done?
I don't know. Not
I
that
just credit diversification in this case. That's solid diversification, not overweighting individual holdings. No leverage either. No need for leverage.
So not including dividends. I wonder if I could bring up total return in this.
Would you have done better if you didn't have leverage?
Probably, because I've had severe volatility decay because the stock market's been incredibly volatile. And my GGUS 2.5 times leveraged ETF. I've probably lost, if we look at that real quick, this is a good lesson for people with gearing, because we talk about this a lot. BetaShares is a sponsor of our finance podcast, so we talk about gearing quite a bit. But it's up 13%. I checked that 2 days ago. It was up 3%.
Was it?
Yeah.
Yeah.
So, but the problem with volatility decay for people is you lose more. It's harder to win back money that you've lost.
What would you be if you just had the ETF, the index, IVV?
Let's have a quick look. So GGUS is up 13% for people playing along at home. IVV, not including any sort of small dividends, is up 8%. So I would actually be behind. Done a bit better than the index.
Yeah.
But the problem is it would have done better had it not been so leveraged.
Yeah.
The problem is it's
on the downside.
Yeah. Anyway, yeah. So your portfolio is up 17%, Drew.
It's great that we get reminded that all the time when we were freaking out in April and we wanted to adjust our portfolios.
Yeah. People were saying, "Are you a professional investor?" Like what?
Why are you
down
guys doing this?
7%. How can you be a professional?
No clients after that month.
ASX 200, meanwhile, is up 10%, not including dividends. So your portfolio...
All portfolios.
Most portfolios, have outperformed the ASX 200.
I'll take that. I mean, probably not the best benchmark for it, given I've got some fair bit of tech.
That's pretty good. So, by the way, I haven't told you about this, Drew. So this is news to you and everyone else that's listening to the podcast today. This game that you see in front of you, like this competition the three of us are playing, you, me, and the community, this is going to get a massive, massive upgrade in 2026.
Oh, nice.
I won't reveal what it is right now, but let's just say there's going to be huge prizes.
Oh, I'll get a prize? Can I get the prize?
Not for us. This is 2025.
Right.
We're poor this year. But next year we might be rich. And there's going to be a huge thing that's happening in 2026, not just here on the Australian Investors Podcast, but across all Rask podcasts and beyond. So that's coming soon. So keep your ears to the podcast airways, because let's just say you could try your hand and in doing so, go in the draw. So it's going to be a lot of fun.
Exciting times.
Back to the news of the day. What's happening, Drew?
Gold tanking.
Yes.
After you posted about people lining up for gold in Sydney, tanked. You and 48 other people. Other influencers.
Get lost. So first of all, this is a joke for people in finance, because the ABC Bullion Building in Martin Place in Sydney, that's where like all Sunrise and all that sort of crap's filmed.
Sits 4 people, doesn't it?
Yeah. There's been lines out the door for people buying physical gold bars, which if you're a robber, the best thing to do would be to stand outside that and just wait for people and pickpocket them. But not suggesting you do that. But then all these finance people are like, well, you can just buy gold through a fund or an ETF or something like this. And now gold is tanked.
Yeah. It's literally down 15% or something since people posted that photo.
So in the last 5 days, gold is down 6%. Yeah. Just today alone, it's down 1.6. It's been... I have no idea. Why is gold down in the last 5 days?
I mean, it feels like it was a momentum rally and everyone was buying it. So everyone was getting in to that as markets felt overvalued. And like geopolitical... You could say geopolitical risk, but it was a lot of momentum. Like there's always bubbles popping at the end of these things. It doesn't mean it's not a good investment, but... when the incremental buyer is going in, it's always going to turn at some point, but that doesn't mean it's going to turn and drop 30% now. There's every chance it continues its rally. And dip buyers come in like they have in the S&P 500 every time it's fallen in the last 5 years.
Yeah, you got that free money, mate.
But you got to be careful with a hedge, don't you? Because there's no value. How do you value gold is what the next person's willing to pay for it. It's a hedge within a portfolio. So what's an appropriate allocation to have in it? Within your portfolio, and are you going to react? Like if you bought it yesterday and you're down 7%, or if you falls further, you're down 15% in like a week, are you comfortable that you're going to hold it for the next 5 or 10 years? Otherwise, it's not going to be a true hedge.
Actually, I think I saw the chief investment officer of Australian Super lining up to get his gold for the fund members the other day, and he on the way out, I'm pretty sure he said that, it's an unlisted asset.
I think you don't have to value it. I think Jamie Dimon came out and said gold's for everyone or something like that.
That was a joke. Yeah. That was a little jokey joke, by the way. Long live Australian Super.
Yeah. Discount rates. I think Jamie Dimon said, you could have a holding in gold. Like as soon as that happens, it's like, all right, yep. Not Larry Fink. Yeah, Jamie Dimon, JP Morgan. Anytime someone like that says buy crypto or buy gold, it's usually not a great sign.
By the time it makes it all the way up the tower, is the time that you go, not. Sell. But some gold in a portfolio, we talked about this last week, is both of us have that.
Still makes sense as a hedge.
Yeah, to have some gold because, it just makes sense. However, I caught up with Tony Crescenzi of PIMCO yesterday, actually. He's based in New York, so we did it via the interwebs. And it was a fantastic podcast. It'll be out in the show not too long. We're talking about how, I don't know if I mentioned this last week, so forgive me if I did, but when you buy a bond, 95% of the return that you get from a bond comes from the starting yield.
I've already used this week.
Oh, okay, cool.
Yeah,
that's good.
No, not on podcast with clients.
Okay, yeah. So so this is a really good number for people to wrap their heads around, because if you're thinking, well, do I buy gold because everyone's lining up in Martin Place? that pays no interest, and I don't know how, like, I think it's going to go up, and we all kind of think it's going to go up, but we don't know because it doesn't really produce income and it's not like a normal quote unquote asset. So what are my alternatives? Well, on the defensive side of portfolio, it's actually a very good alternative right now, which is bonds and government bonds, and they're playing like 4 or 5%.
Yep, between 4 and 5.
Yeah, so you can get, you're effectively, what that means for people that don't understand is you're effectively saying, if I held this bond until it was paid back to me, or the ETF, or however you're getting your investments, it would then return 5%.
That's right.
But the default rate on government bonds is like basically zero.
Yeah.
From most governments, basically zero. So in effect, you're taking quote unquote no risk, and you're going to get your money back. The only risk that you really face, therefore, is if interest rates suddenly go up
significantly. Yeah.
And then the bond price goes down.
Yeah.
So that's the major risk. But if you're comfortable with taking that risk that interest rates won't continue to go up, or expectations won't continue to go up, which they're not really, pretty good trade.
That's what you get in either IAF or VBND are two of the most popular index options of that.
We hold both of those, yeah.
But sitting on it solid, 4 to 4.5%, depending on where it is.
Yeah, good one. Other results out of the US, Drew. Tesla's actually Tesla buy, hold, sell after the results.
Buy. Kathy, someone asked me for the Kathy Wood link. Maybe I'll put that in the show notes as well.
Okay.
Which is on Diary of the CEO, but they're a competitor to us. So we're going to take Stephen down.
Yeah, we will. Easy.
You had some US ASML reported, or briefly reported. Texas Instruments reported, which I didn't know how important Texas, they make all the analog chips apparently, so like to do basic functions. It wasn't a great report. ASML, you know this industry better than I do, is the lithography group. They're basically the only one in the world how that's possible, that creates the machines that help the TSMCs to build the chips for NVIDIA. Have I got the supply chain right this time?
Yes. So it kind of. So they create the lithography machine, which is like a laser machine.
Or lasers.
Yeah, it's crazy technical. That then sits in a foundry, which is where they make the
TSMC.
Chip, TSMC, and then NVIDIA is designing those chips and buying the chips. And then, yeah.
But ASML was up 45% in the month before it reported. So it's kind of like, where is it going to go? It didn't move a lot. Sales are okay. They're not the exceptional level of sales growth you're seeing from NVIDIA and those other groups at the moment, I guess, because they haven't run out of lithography machines yet. And the demand for that part of the supply chain, which probably makes it a more defensive play on the artificial intelligence theme as opposed to buying the chip designers at the other end.
Question for you. When you think of Texas Instruments, do you think
graphic calculator?
Do you think of this, Drew, when I bring it up on the screen for people that are watching? The Texas Instruments TI-83 graphics
$600 now.
I know.
What?
So it's a calculator.
Syncos-tan?
Yeah. Syncos-tan.
I never know what that means.
X to the power of Y. Like, this is what I remember for Texas Instruments.
Maths methods.
But it's obviously not that these days, Texas Instruments.
No, they make some sort of, like a chip that goes in your toaster, right?
Yeah, so they make the non-sexy types of chips.
Yeah.
These were really
not potato chips, just
not potato chips. Out of COVID, they were really popular, these types of businesses, because remember the auto shortage and all that sort of stuff. So you see it. Yeah. It was really, so over the last 5 years, what's it's done?
13%.
Nothing.
Yeah.
But since like 2010, it's from $34 up to 170 odd. But yeah, that's the business. So the ticker symbol is TXN. For Texas Instruments. There are a few that operate in this market, but they're one of the big ones. Forward revenue growth, compound growth for 2 years of 10% per annum. So it trades on a PE ratio of 31 times.
That's pretty cheap.
Probably as good as CBA.
Has to be some sales growth, yeah. Apple hit a record high. That was came as a surprise. Like one of the only companies in the top businesses to hit a record high this year. Up 50% from its lows. I thought that was super interesting. I needed to upgrade by now. I just realized all the memories. I don't know how to get rolling again. So no one called me, probably after that phone call last night. But apparently,
Drew randomly butt dialed me. And I don't know what the time was, but I was sitting on the couch and I was like, "Oh God, answer to Drew
this.
Or take care of kid."
Thanks. So if you ever call me again, I got
you ever call me again, it's
Very
over.
serious threat. I was on iMessage. I don't know how it happened. A bit of a Luddite when it comes to that stuff. But the renewing cycle for iPhones are back, even though they cost like $2,500 to $3,000 for the new one. So much better demand for the new iPhone, up by 14% over the previous release, which is quite rare for this business. And that has sent their share price back over an all-time high. I think it was up something like 10% on the day. I was looking at market. You remember when the first company hit a market cap of $1 trillion?
Yeah.
Do you know how many companies are over $1 trillion now?
I don't know how many are, but there'd be a lot.
It's like 15.
Really?
And I did it in Aussie dollars, which is a bit of a free kick for the US companies too.
Yeah.
But I was just looking at it, I'm like, that's $1 trillion? That's $1 trillion? There was so
well, last
many
time I checked,
companies.
even my honourable Costco, which is where I got my Caterpillar t-shirt this week, thank you very much. Is that now a tax deduction? Costco is 420 billion US, so that would be over 500 billion easily Australian.
There was so many. It was kind of, I didn't even realize some of those companies were $1 trillion companies. There's so much wealth being created in private and in public markets in those companies.
JP Morgan, $1 trillion company.
Yeah, I did not expect that.
Berkshire Hathaway, $1.06 trillion company. What else would be, what's that thing that does the circuit boards, the
NVIDIA?
Custom graphics, custom silicon, Broadcom. Let's have
Microsoft,
a look at Broadcom.
Apple,
Broadcom
Alphabet,
1.6.
Saudi Aramco, Broadcom, TSMC, Tesla, Berkshire, Walmart, Oracle, JP Morgan, Eli Lilly, Tencent, Visa, MasterCard.
Even Facebook. Facebook is a $1.8 trillion company.
Yeah, I just couldn't understand that.
Imagine if they didn't spend any money on the metaverse. That'd be 10 trillion.
I know. Yeah, more ads. More ads for everyone.
More ads, please. Yeah, it's crazy. There's actually an update put out. I don't know if anyone that listens to this show has enough self-respect to go onto the X platform. But if you're like me, you do eventually go on there. And it's good for investing content, formerly known as Twitter. What they did, because Elon Musk is kind of right, that like Tesla is obviously the world's leader in AI. For automobiles and for visual types of AI. But he also owns Grok, which is this tool that's kind of like ChatGPT. Some people say it's a lot better.
Yeah.
I use that. I have a subscription to the more premium version of Grok, unfiltered, and also ChatGPT, and also Claude, and also all of them. Because I'm kind of like, early days internet, like not everyone just used Internet Explorer, right? There were other options and I wanted to kind of see what they are before everyone else figures it out. But anyway, what they've actually done on the X platform, because there's so much spam and absolute rubbish and dribble on that platform, like the amount of crap that's on there, it's unbelievable. So what they've now done is they run every single post that gets published, every single one in the world, through Grok, and then Grok ranks it based on the quality of the tweet. So think about that for a second. I think they said it's 100 million a day or something. So 100 million posts, images, videos running through Grok that then rank it. Because normally like social media platforms rank based on mysterious algorithms that no one really understands. But now it's like really obvious. Like if it is a good piece of content, according to AI, it's going to get seen by people. Doesn't matter how many followers you have, doesn't matter any of that stuff. It's based on the content and the quality of the post, which is really interesting use of AI.
Incredibly interesting and scary at the same time.
Yeah.
And they said, was it ChatGPT or was it Reddit came out and there was an argument between them and Chat or one of the other AI platforms because they were scraping all the content from Reddit, which is a chat platform. I think someone said that. Someone brought up, like, do you know where most of the content from your ChatGPT responses come from? Reddit. Yep. All right. That's where the dad jokes come from. So thanks to Reddit.
Thank you, Reddit.
Yeah.
Well, that's it. Like privacy is an illusion. And like, I guess intellectual property on the internet now is an illusion because really anything that you publish online could be picked up by one of these bots. It's kind of crazy actually how it works.
I was a bit surprised that Amazon, this week, I was sitting at basketball training. The guy next to me was trying to log into Xero. But Amazon Web Services was down across the world for like 15 hours. Share price didn't move. So you couldn't get onto Zoom. I think, was that in one of your chats as well? I was in one of a work chat or something, and it was like, you couldn't get onto Zoom. You couldn't get on all these platforms because they're all hosted on Amazon.
Yep.
And the share price didn't move. I'm like, if that was Qantas or Optus or Medibank, or there's 700 companies in Australia that had outages, or they were hacks, not outages, it would have an impact. But no, 2/3 of the internet relies on Amazon, but doesn't matter. It's all good.
It's interesting. I was speaking to one of my neighbors actually, who is a senior cybersecurity engineer, and he goes overseas and whatever. Remember when CrowdStrike went down and all the airports, this was last year, they couldn't, and he was telling me all the CrowdStrike did was just offer people a discount. They're like, we'll give you a discount for a year. And he said in the industry, like, no one left.
Yeah.
Because he's like,
so
what are you going to do? What are you going to do? Like, CrowdStrike, for people that don't know, is like the world's leading AI it's hard to explain, leading AI cybersecurity firm that helps fight against, attacks. And it's used by all of the big platforms like with Microsoft and these types of things. But what are you going to do, Drew? If AWS goes down, what are you going to do?
It's like when you get a train delayed, or they give you like a $4 voucher from your flight being delayed. Or if you've got a train delay, you have to go apply for the discount to go and get it. It's like, well, no one's going to do that. I left you 2.5 hours late, but here's $4. I assume that's what it felt like if you were paying CrowdStrike $17 million a year. It just shows you that you were talking about the other day, the Tesla, like the market power that some of these companies are getting, and why that can be so valuable is what Tesla increased their cost of mobile subscription or something. And you're like, what if it went from $9 to $100? Would you still use it?
Well, it went from well, what am I going to do? I'm not going to have internet in my fully autonomous vehicle.
Yeah.
Like,
can you Bluetooth?
I'm going to pay.
Probably.
Well, when you get home, your Tesla automatically picks up on your Wi-Fi and it automatically uploads all the data. But I was chatting to a really great fan of the show, actually, Anirban Mahanthi, who used to appear on this podcast, and he was telling me how the different components of logic work inside a Tesla, and a lot of the actual processing of autopilot or full self-driving supervised, a lot of the self-driving technology actually is interpreted and run inside the Tesla. So it's not so much like it needs to, every time I approach a roundabout and it's driving me through the roundabout, it's like, hey, ChatGPT, what do I need to do? Like, it doesn't do that. It actually it processes it all on the car itself.
Yeah.
Which is why it's so advanced, because it's basically one big computer just on wheels.
And a battery.
Yeah, and it's just amazing at both of those things.
So
that's how it works. Yeah, exactly.
You wouldn't want any lag when you drive.
Imagine if it's like that. So,
but you drove.
Yeah, ChatGPT, hey, great idea. You can turn right here if you want.
You drove to the pub and back though.
Yeah, fully blind as well, Drew. No, so
there is rules still around that, aren't there?
Yeah. So if you don't know and you don't follow me on social media, I'll see if I've got this. I'll see if I can bring this up. But for people that aren't watching,
this is not your Instagram account you're bringing up, is it?
It is, and it's pretty. Yeah, it's okay. I can't get in. Thank goodness, Facebook's blocked me, so I can't get even to it anyway. But effectively, I showed people that effectively you can now use full self-driving here in Australia, super fast. So what it means is people didn't really know this and still don't know this, but you can drive anywhere and your Tesla will drive you there.
Do you have to put in do you put in the destination and it just starts going, or do you go on the road and you take over?
Yeah. So my stepdad came over the other day and took me for a spin. Now he's a guy that's got a handlebar mustache. His mate's got 1,000 horsepower V8, right? And he was like, got on the new Tesla, a dual motor, and he's like, holy shit. And I was like, oh, but here's the thing. Also, I'm not driving. I just put my foot down. So you can talk to it and you can say Costco, Melbourne or something like that. It will come up in Google Maps and then it will drive you the whole way there.
Yeah.
So for people that understand Victoria's geography, I went from the eastern suburbs, like far eastern suburbs towards the Yarra Valley. I went all the way over to the northern suburbs, through the city, in peak hour, and then it drove back. And then I went from there to Flinders, which is down the bottom of the bay. And then it drove back all by itself. And importantly, it drove on a dirt road, which I wanted to, because I'm obviously trying to test this thing out and hopefully make sure no one else dies.
Yeah. But be able to fall asleep one day. Yeah.
There was a branch down on the road on a dirt track. So on this dirt track up in the hills, and I was like, oh, here we go. Let's see what this thing does. and it actually assessed that the beside the road there was a grass patch, and so it just got to it and then went around onto the grass and then continued. And I was like, okay, so
it knows what it's doing. I thought it'd get out, stop, robot to get out, move the branch,
yeah,
keep walking.
Yeah, no, but it does. So I know I was texting you and a frenzy the other day, but it is the most remarkable technology I've ever seen.
Yeah, it looks amazing.
Yeah, it is. It actually is incredible. I went to Chemist Warehouse the other day, and I was like, okay, I'll go to Chemist Warehouse and see how it goes. So it got me to the place, and then it showed a map when I arrived at Chemist Warehouse of all the available car parks. And I pressed on the thing, I went, beep, that one, and then it reversed me in.
That's pretty cool.
And then you don't even turn it on because it's electric, but as soon as I sat in, I go home on the screen, I just need to press the accelerator for a split second, and then it goes, I'll take you the rest of the way, out of the car park, down the hill, onto the main road and home.
And the supervised means you have to be below 0.05, I'm guessing, and you have to be in the driver's seat. And that's just a legal requirement at the moment.
Yeah, I'm glad that you jumped straight to
0.05.
Alcohol-related.
You said you went to the Flinders Hotel, so I was naturally going to ask.
How can I get away with this? So that's correct, Drew. So you can't, like, you're in control. There's always has to be a human in control, and I think that's a really important thing for people to understand is, like, you still are in control, no matter what people try and make you believe online. I'm going to bring this up for people that are watching, and if you're listening, I'll walk you through it. If you are listening and you ever want to watch a Rask podcast, you can just head to YouTube where we do everything over there. So what you can see in front of you on this page, this is our Cloudflare account at Rask. So this shows you Cloudflare is, like, again, one of the world's biggest cybersecurity and management companies. But what you can actually see on the screen is you can see all of the different AI bots that are currently trawling or have recently trawled the Rask websites. And you can see at the very top, the most popular bot that's currently scraping our website is the Meta, Facebook one. Then it's the one from Microsoft. Then it's the OpenAI, the Google bot, which is just for internet. Apple's one.
Like for your search engine.
Amazon's Perplexity, Claude by Anthropic, ByteSpider, which is ByteDance or TikTok. So that's the Chinese government scraping the website. So you can see all of these things. Now, this is how AI is trained. So AI is trained on the data that's available on the internet. And so this is an important understanding, is because when you think about relying on the information that comes, you made the joke before that all of your jokes come from Reddit and ChatGPT, because ChatGPT sourced all its jokes from Reddit. And this is actually what we're seeing is kind of this full circle loop on content and on the way AI is being used. People are using it more like a search engine, and all it's really doing is just showing you what Google search was showing you, which is why if you were building a bull case for Alphabet, Drew talked to Pullen from, what's his name? First name? From Magellan this week. His great podcast out earlier this week.
Yeah.
If you haven't listened to it, and they talked about Alphabet in that podcast. But if you had a bull case for Alphabet stock right now, this is a $3 trillion stock, Drew, it would be that it basically has come full circle. And now Gemini, which is the Google AI, is now getting so much more intelligent, way faster than everyone else, because still every single day, billions of people are using it and contributing content to it without realizing that you're kind of just feeding this gigantic thing called Gemini, and DeepMind. So really interesting times. Now, Drew, we do have to get to some of these questions, and I would like to start with the small cap one, if that's all right with you.
Yeah, of course.
So if we do answer your question on the show, we absolutely love them. Send them in via the link in your podcast player that says ask a question, or in the YouTube description. But remember that we are strictly limited to general financial advice only. We don't know your needs, goals, or objectives. So the best place to get one-on-one advice that's right for you is through a financial advisor, a licensed and trusted financial advisor. You can find a link to financial advice in the description as well. And importantly, when you hear us talk about things like ETFs, super funds, insurance, they all have a product disclosure statement. Be sure to read them before you invest or do anything. So here we go. So I might start with this one. Silent, not deadly. Like this one. You have often mentioned using an investment thesis. What's your advice on writing your own? Drew, do you ever write out an investment thesis?
I've written out our investment thesis and kind of updated it quite regularly. And I don't necessarily rewrite it all the time. But I think how did we get to it? Like, how do you write your own? Part of it came from early experience, but then a lot from reading and study as well. I think that's where, like, you just can't come up with and go, oh, I'm backing crypto. Like, it's got to be considered, and there's a lot of inputs that have to go into it to build it. But I love, as you know, I love writing, even with chat and without chat. I used to do it all pre-AI. But it's so central if you get it right. Like an investment thesis, we call it more deeply. Your investment thesis might be all the 12 broad guides between what you're investing. You've written it incredibly well on your website, but that has to go into an investment policy. So you can have a thesis and the way you think, but then you need to have how it can actually be executed and how it can be followed. And an investment policy is, like, in our view, the most consistent predictor of success in investing, whether it's the future fund, whether it's Canadian pension, like all these massive successful investors, Bridgewater, all these groups, they have an investment policy and they have an investment thesis, and it's stated, it's reviewed. It doesn't mean you have to stick to it if it doesn't work. But they all have something that they can lean back on when times are tough and when they have to make big decisions.
Yeah, I like it. So that's good, because you're drawing the distinction between an investment policy statement, sometimes called an IPS, investment policy statement, which is like the investment overall, like what's your strategy? Almost. Yeah. And then, because you got I think you called them the golden rules, 10 golden rules. Yeah. And then underneath, you have an investment thesis. And when we talk about investment thesis, that's normally per security or through a theme or something like that. And so, I think that I'd go through this in our now free course, which is our Value Investor Program, which is fully available and free on the Rask website. In there, I talk about how you can use Notion. We used to use Notion a lot as an analyst team. So in there, effectively what you would want to have is the core pillars of your investment process and your investment kind of policy. So say, for example, you wanted to find companies that were high quality, low valuation, and growing revenue, because you thought that growth was important. So quality, value, growth. What you would do is you would structure your investment thesis template in Google Docs or Notion or something like this around those things. So you would have prompts in there in your template, and it would be like, why do I know this? How do I know this company is high quality? What metrics tell me this company is high quality? And so on and so forth. And you do the same for value. Like, what's the valuation? What's the valuation relative to peers? And then you do the same thing for growth. The thing that's always missing from an investment thesis that's done poorly is the reasons that you would sell.
Yeah.
So Charlie Munger obviously talked a lot about inversion, which is one of the most important things in investing, is when do I know to sell this company? So when does my thesis break? Now you could say, well, I've got growth, I've got value, I've got quality. And you could retest that thesis in 6 months and a year, 2 years, 3 years, and you could be like, okay, the original rules of my investment no longer stack up, therefore I should sell it. Or maybe they've changed and you're happy with the change. But if you, at the very beginning, if you're like, here are 3 reasons that I would sell this company that I'm buying right now. So it might be like, well, it's reached my valuation target. It is, it's expanded into a region that I don't think is investable or something like that. And then those things come true. Like, you then see that as an update. You're like, well, my previous self was either wrong or it's time to sell.
Yeah.
And I think that's the most popular thing. So that would be my advice for writing your own.
Always include an exit strategy. I mean, one thing I think is often missing from a thesis is what your objective is. Everyone wants the best return when better than average when market's good and not negative when markets are bad. But actually thinking about what return you need to achieve your goals, it should be the basis on which all your investment thoughts, thesis, everything comes in.
Yep, definitely. So we did get another question, which I'm just bringing something up here. But Average Joe wrote in and said, howdy, Owen and Drew. Keen to hear your thoughts on the ETF QSML. Do you think it's a decent way for the average investor to get some small cap diversification? I know you typically steer clear of ETFs in this space, but it seems like most of the active managers are locked behind their quote-unquote sophisticated investor gate for small caps. Appreciate your insights, and please keep the dad jokes coming. You actually received some cracking feedback over on the Australian Retirement podcast recently where someone was saying, I love Drew's laugh. What do you say? I love Drew's laugh. I wish I could have some of that.
Not quite.
And I was like, oh, okay.
Makes me want to go and get Joe Rogan.
Yeah, Joe Rogan. So QSML, for people that don't understand, is an ETF from Van Eck that is focused on global small caps. So it's not Australian small caps, it's global small caps. It's got $1.6 billion. Yeah, $1.6 billion invested.
Solid size.
It's a big ETF. It's got $1.6 billion already invested. 59 or 0.59% is the management fee. So it's on the higher end for an ETF, but that's pretty typical for Van Eck. It targets companies based on the entire small cap index, like in the world.
Would you call it semi-actively managed?
Yeah, because it's got a 4-step process. So it's like, it says from the website, looks at all companies in the MSCI World ex Australia small cap index. Then it rates the companies for quality based on return on equity, earnings variability, debt to equity, etc. It selects the top 150, and then from there it weights them according to their quality score.
It's active managed, but rules-based active management.
It's rules-based, yeah. But it's the reason why people use rules, as you and I discuss a lot, is that effectively you kind of need some rules for small caps because sometimes you end up with all just duds, particularly on the global stage.
And quality is a good thing to be looking for generally.
Yeah, definitely, isn't it? Right. And then there's even here, I think I just saw our good friend.
I just find it. Yeah, my only challenge with this is the lag that comes through it. Like you end up having a lot of the top companies in the theme that was popular 3 months ago. That makes sense because they improve in quality, then they get increased in the portfolio, but then the market turns. That's your Evercore. That's the semiconductor group, isn't it?
Maybe, yeah.
Intuitive.
Texas Roadhouse is in there. I thought it was going to be Texas Instruments. But
sounds like a movie.
There's a lot of companies in here you don't know, which is probably a good thing because
Flex.
It means that you don't have exposure to them. But yeah, the ETF, if we just bring it back to brass taxes, over the past, we'll just do 12 months because that's consistent across all these examples I'm about to use. The ETF has returned over the past 12 months 12.36%.
And no income, basically 0.33.
Yeah, so 12.36%. But then if we go to, say, the Munro Global Growth Small and Mid Cap Fund, people may remember this fund because we had Qiao Ma on the show. She came on the Australian Investors Podcast last year, and her episode was an absolute cracker.
She's
one
amazing.
Of the best.
I love every time I've interviewed her.
Incredible. I'm going to put it down and make sure I put that in the show notes. Qiao Ma
I
podcast.
always try and channel her energy whenever I come on here.
She is brilliant. So that fund has returned 39% over the past year. Now that's 1 year's results. So it's a relatively new fund. So I just wanted to bring this up as an example. But then if we look at the Fairlight Fund, which is from Nick Cregan.
So these are small and mid caps, SMIDs?
Yep. So this is the Fairlight Global Small and Mid Cap Fund. And these are all numbers for September 2025. This fund over the last year has returned the last year has returned 3.7%. Over 3 years has returned 16%. So there's variability here in the results, right?
Massive.
But over the long term, Fairlight has outperformed, and many of the small cap funds have outperformed. So I guess my point is here, QSML could be a good one, but it's semi-active, as you say, Drew.
Yeah,
and,
it's not the worst.
It's not the worst. But I'm going to show people behind the curtain on the Australian Investors Podcast analytics. This is the only time I've ever seen this, Drew.
Really? I'm on this all the time.
But this particular chart, right? So when we published the podcast with Qiao Ma, I think this was,
so
the 5th of June, 2025, right?
Yeah.
I think that's what it says
Nearly
there.
a year ago, yeah. Earlier this year, 5th of Jan.
Now, for people that are listening, I'm going to walk you through it. The chart kind of goes up for number of downloads. Then it goes flat for 270 days or 250 days. Then it goes vertical again, right?
And it quadrupled.
What's your inference from this data here, Drew? And it's still getting watched.
Talked about small caps.
232 people are watching it every 2 days. So 100 people
if you
are
had one
watching this podcast.
on gold at the moment too. So basically, you've seen something's triggered people to watch a video that's 250 days old. So small caps or the Munro Fund maybe was one of the top performing funds of the year, and everyone's like, oh, got to learn more. Qiao Ma, YouTube, algorithm, bang.
Bang, done. So you see results of
that's massive.
39%, right?
And you go look at who did it.
And then you go, oh, who did that? Qiao Ma. Then you go on Google, Qiao Ma. And this comes up, and this is the number one podcast that Qiao's done.
And then Owen gets paid for it.
And boom, we get $40.60 of estimated
$40. There we go.
Take that to the bank, ladies and gentlemen. So my point is that this is actually showing us at the pointiest end that people chase returns.
Yeah.
And it's a brilliant fund. Don't get me wrong. I'd happily invest in it. I think you allocated to it in your fake money portfolio.
I did.
It's a great fund, but at the same time, you just got to be mindful, everyone, that even in small cap land, there's good and bad, right? So I have a tendency to lean towards active in global smalls and Aussie smalls, but index like QSML, maybe it's okay for a part of the portfolio. It is rules-based. It's not a pure index. Just keep that in mind.
And there's so much potential for outperformance in smalls that I prefer to go active. And there's a question here around that these are wholesale funds. They're not wholesale. The minimum investment, I think, is usually about 20 to 25 grand. I'm sure we'll be corrected. So you can tend to access these investments, sometimes without a financial advisor. A lot of the times not. But at levels as low as 20, not as low, levels of 20 to 25 grand.
Yeah, it says invest online in the Fairlight one, so I assume that
you can get into it. Yeah,
yeah, I'd assume so.
You do have to do with the paperwork, and you can't get all the reporting taken care of generally. And you're not usually going to see an actively managed small cap on the market either.
No, you won't. Because I asked Qiao why isn't it an ETF, and she says because we don't need it to be. And I was like, okay, I'll take that. So yeah, you won't get it in an ETF. So Drew, I've got to get your dad joke from you. And if you want to reach out to the team at Waddle Partners and I guess I even understand the latest in shackets and what's coming in this summer, you can email Drew or you can head to the waddlepartners.com.au website. Don't forget, we've got a big summer coming up on the Australian Investors Podcast. So I'm going to tease this game a little bit more that we're going to be putting together, but it is coming up soon.
And a roadshow.
Yeah.
I'll bring my swag.
Bring your swag. If you survive this weekend, bring your Kmart swag. I'm sure everyone that's a fair income bloody, bush traveller.
I was more looking like torches and that sort of stuff. I'm like, no offense to Kmart, but I'm not going to buy their butane gas stove.
You never know.
Who knows?
But you did grow up on a boat, so there's that. So you got some strength. So good luck this weekend, Drew. Give us your dad joke as we head off into the weekend.
This was sent through by the person who also asked for the Cathy Wood interview link on Diary of a CEO. Why are the eyes the last things to go when you pass away?
Why?
Because they dilate.
Bit of a play on words there, Drew. I don't mind it. It's not half bad. Well, mate, this is always fun. Thank you for your time.
Thank you.
And I'll see you next week.
Good to see you.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.